Hi, and welcome to the Stockscores Market Minutes for June 27th, 2014. This week's topic, when market corrections happen. We hear the question over and over again in this bull market. When is the next correction going to happen? Well, corrections tend to come when investors are irrational and paying too much for stocks. Parabolic trends are a sign of investor irrationality. The risk of a correction in a linear trend is much lower. Now, this makes much more sense when I show you visually what I mean when I say parabolic versus linear trend. This is a chart of the biotechnology ETF, IBB the symbol, and you can see that from January 2012 until March 2014, this market was in a trend that got steeper and steeper over time. And ultimately, the trend went from being linear, a straight line, to being a curve, parabolic. Now, in March, we had the correction in this sector, which brought prices back to the linear trend line. If we drew a straight line across these bottoms, you would see that that is exactly where the biotech sector dropped to before it bounced and then resumed its upward trend. And so the real cause of the correction, or at least the signal of the correction, was when the trend went parabolic. Now contrast that with the financial services sector, and you can see here that the trend is linear. I can draw a straight line across the bottoms, which I have done in green, to show that linear, rational upward trend. And the fact that this trend is linear means that it is much less likely to suffer from a correction. All right, let's get into our weekly market analysis, and here is a chart of the S&P 500 ETF, and you can see that it is in a linear upward trend. It is in the midpoint of a price channel and therefore neither overbought nor oversold. It has been pretty quiet this month, and the market is simply sort of grinding sideways inside that longer term upward trend. I expect the trend to continue. There's no signs of a breakdown just yet. The Toronto Stock Exchange is also in a linear upward trend and again around the midpoint of its upward sloping channel, therefore not extremely risky one way or the other. There are some pockets of risk. The energy sector in the Canadian market got a little overbought and we're seeing it start to correct, but in general the Canadian market is bullish and in a linear rational trend. TSX Venture broke its downward trend coming into 2014 and it's now working on building optimism. The process is fairly slow, but it is a process that is underway. Now last week we broke a short-term downward trend line. This week the market sort of grinded sideways and was pretty quiet, but I do see this market improving in the months ahead. It may take 6 months before this market gets better, but I don't see it getting worse anytime soon. Treasury market really got irrational to the downside through 2013. You can see the sharp downward move which took that market down and away from its trend line. And what we've seen now is it correct back up to the trend line. The question is whether it will break that pessimistic downward trend, meaning interest rates go even lower, or will it break the upward trend that has been in place for 2014? Real critical point right now for treasuries. We're going to see this market go one way or the other very soon. The US dollar is in a more or less a sideways trend over the last 6 to 8 months. Pretty boring, a downward bias in that sideways trend. You can see that there are falling tops. That means that there's general pessimism on the US dollar, but not outright selling pressure. The gold sector is fighting a downward trend in the medium term, but in the very long term, it's actually bouncing off of a very long-term upward trend, which you can see on the monthly chart going back to 2005. Now, again, a critical point here because it's going to break one of these trend lines soon. If it breaks that red downward trend line, we'll see a resurgence in gold prices. If it instead breaks the very long-term upward trend, which is shown in green, and this green line is short on this chart, but if you take this chart back monthly going back 10 years, you'll see that's a very long-term upward trend line. Well, if it breaks that line, then the long-term outlook for gold is negative. So right now I'm slightly bullish on the gold market because the longer term trend is always more important, but until we get a break of one trend line or the other, I don't have a real strong opinion on gold. Oil has rallied for most of 2014, which has allowed the energy sector to do very well this year, but it is now at resistance, horizontal resistance, at the $26 mark on the OIL ETF. It needs to break through that resistance. My sense is that in the near term, we're going to see oil prices pull back a little bit and perhaps try to retest that resistance within a month or two. Finally, fear is at an all-time low and shows yet again that there really isn't a big concern about a major correction in the market until we start to see this chart perk up and break the long-term downward trend in the VXX. I wouldn't be too concerned about a correction. So my outlook then, bullish on US stocks both short and long term. Neutral on gold long term, but bullish in the short term. It is got a little bit of upward momentum in the last little while. Bullish on oil long term, but I think short term it's going to be fighting against some resistance and get stuck. Stock markets continue to grind higher on complacent light volume. Expect the markets to be quiet next week for holidays, but action should pick up with earnings season the following week. Gold at a critical turning point and oil encountering long-term resistance, which should motivate continued profit taking in the energy sector. Well, that has been the Stockscores Market Minutes for June 27th, 2014. Have a great week in the market and trade well.